right, so today we're going to be looking at objective number 6 in section 1 of the CSEC Principles of Business syllabus. We would have covered objectives 1 to 5 in previous videos, and so today we're going to be looking at section 6. Now, this one, it's one of the more fun parts of section 1, describing the various forms of business organizations and arrangements. So we're going to start with sole trader and partnership. We're going to start with sole trader and partnership, and then eventually work our way down to private and public limited companies and franchises. Because some of them have a lot of, you know, nuances to them. We're going to discuss them in little bite-sized pieces. All right, so today we're going to jump into the sole trader versus the partnership, because normally CXC tend to want you to compare, the sole trader versus the partnership, the pros and cons of each. The advantages of sole trader versus partnership, and vice versa. Another name for sole trader would be the sole proprietor. So if you see the word sole proprietor, sole trader, one in the same. So don't get confused. Sole trader and the sole proprietor, one in the same. Sometimes CX want to trick you, with the wording, but they've asked all the questions they can. They just word them differently now. All right, so let's jump right into this. So in a previous lecture slide, I showed you the difference between the private and public sector. So just to recap, the types of business organizations found in both. So the private sector, again, you can find the sole trader or the sole proprietor. You can find partnership. You can find companies. And there are different types of companies. You have the private company and the public company. You also have the conglomerates, multinationals, the franchises, and the cooperatives. And again, we're going to dig into all of them later on. In the public sector, on the other hand, we have the government departments, including ministries, the Ministry of Health, Ministry of Education, Ministry of Justice, whatever you have it in your country. Then we have the state corporations and the nationalized industries. Again, for example, your utilities, maybe your water company, your electricity company. Those kind of companies tend to be nationalized or state-run corporations. And then you have your local government. Now, this doesn't pertain to all countries in the Caribbean. Some of us don't have local government. Our local government happens to be the federal government or the national government, because we are smaller countries like St. Kitts and those places. But large places like Jamaica, they might have local government, different layers, different levels of government. So let's move right in. Sole trader or the sole proprietor. Who or what is a sole trader? Now, a sole trader is an entrepreneur who owns a business alone. What does this mean? We're saying if you are a business person and you are the only one who owns that business, you are a sole trader. You are a sole trader or a sole proprietor. Most small businesses are sole trader businesses, maybe well managed and profitable, maybe well managed and profitable. You can't really guarantee those things. Can benefit from new technology. Again, that's you know a case by case basis, and has unlimited liability for debts. So let's start from the top. A sole trader or a sole proprietor is an entrepreneur who owns a business alone. Now, we are not saying that they work alone. You might have some employees. So it's not saying that you're the only one who works on the business. You might have some employees working for you, one or two employees working for you. But for the most part, sole traders are those people who own a business on their own. So a lot of us in high school, you go outside the gate, you see somebody peddling their wares, somebody selling a hot dog here, somebody selling pizza there, a little tray over there. You know, they tend to be sole traders. A little cafeteria being operated here, sole traders. You go and try to catch a bus, you see the busman driving his bus, normally that's a sole trader. He might be the only one paying the bank for his bus or his taxi. So that's a sole example of a sole trader right there. So many people might be wondering, are busmen businessmen? Yes, they are. Are they entrepreneurs? Yes, they are. Somebody running a little pizza hut, a little shop, a little, mom and pop shop, that's a sole trader. You go down the road, it's a little shop, you buy a little drink, a little water, a little food. Normally, that's a sole trader. So a sole trader is somebody running a small business on their own. They own it. Not to be confused with them alone working. They might have helpers. So as I say, most are small businesses. Sole traders tend to be tiny businesses. Like I said, the mom and pop shop down the road, the old lady with a tray outside by your school gate, The man running the eatery right there by your school when lunch come, you go and buy your little food. That's normally a small business. That's normally a sole trader. So those are examples of sole traders. A barber running his barber shop, a lady running her hair salon. That's a sole trader. Okay. So those are examples of sole traders. Somebody who owns their own business and they tend to be small. They said maybe well managed and profitable. But like I said, this could be a case by case basis. Some people have a business, but they choose to open when they want. Like they're begging people are begging them to open. So that's not really well managed to me. Some sole traders feel as though that they are obligate people are obligated to them, so they choose to open when they want. They treat you how you want. So sometimes they are poorly managed. I can't really say all of them are properly managed. And profitable, no, profitable in this sense can mean that the fact that because they are small businesses, the amount of money you put in would be less than, let's say, a huge company. So therefore, your returns tend to be, profitable. For example, if you only spend, let's say, $500 a week for to buy your drinks for, the school children to buy and drink. If you spend, about 500 for to buy your rice and your vegetables and you cook to sell to the school kids, then if you make $600 or $700 after all expenses have been taken out, then that's profitable for you. Might be a small profit, but it's still profitable. You actually made more than you spent. So in that sense, yes, they're normally profitable because I don't think somebody would go out every day, put out their all and not make a profit year after year. Because to be honest, sometimes you see these people by your school from the time you start Form 1 straight up to Form 5, and then your siblings or your children come after and they're still there. It got to be that they're making a profit. Now the profit margin might not be as wide as a huge company, making the millions of dollars in profit, but if 500 in profit to make in a month, that's still enough to sustain you and sustain your family. So yes, they are normally profitable, but we're not saying that they're hugely profitable. Then they say can benefit from new technology. This again, case by case basis, because there are some one man operations out there that is all based on e-commerce. Now, those are really on the cutting edge of technology. Some people actually sell things on Amazon, sell things on eBay. They are sole traders. They're the only one running the business, but they're still on the cusp of technology, e-commerce. But then there are others, like I said, in mom and pop shop. You go to the shop, they're still using calculator to tally up how much you owe them. You go there not many, no AC in the place. So some of them can benefit from technology because a lot of them are small endeavors. A lady with a tray, she rain come, she cover up, she tray with your little bag and stuff like that. So some can benefit from technology, but not all. Then this is a key thing for a sole trader. Very, very key thing you have to zoom in on. This last point right here. Unlimited liability for debts. Unlimited liability for debts. And this is a keyword you should understand going forward in business. Okay, this is a keyword you should understand. Unlimited liability and the other one limited liability. We are going to deal with limited liability later. But for now, the sole trader, unlimited liability is one of the characteristics of a sole trader company. Now, what is unlimited liability for debts? Now, as the name suggests, it's unlimited. Okay, in a business, you have assets, you have liabilities. You want assets. Assets are a good thing. Liabilities in a business, that's a bad thing. You don't really want liabilities out there. So your assets, good thing. Liabilities, bad thing. Now they say unlimited liabilities for debts. Meaning, normally when you start in a business, you go to your friends, families, you beg them some money. Yeah. But then you say you're gonna pay them later. You go to a bank, ask for a loan. Of course, you have to repay the loan. Now the thing about sole trader is this. The person going for the loan is the owner of the business. And the name on the loan is the owner of the business. So it's not like you're going for a loan for, let's say, your company is called, Flashy Cuts Barbershop. No, you're not going for a loan for Flashy Cuts Barbershop. If the owner is John Saunders, then John Saunders is the one who's going for the loan to start his Flashy Barbershop business. So what this means is that if the company, if the business that John Sanders started, if the barbershop goes under, and that's it, don't make the money, start making losses, and it fails, now John Sanders is on the hook for all the money that he borrowed. So that's what they're talking about when they say unlimited liability for debt. It means that there's no limit for how far the bank can go to reclaim their debt from you. So if you put up your car for a loan, the bank going with your car to repay your debt. If you put up your house, if you mortgage your house to go and start a business, then the bank can actually go with the house to try and reclaim the debt that you owe them. So unlimited liability here speaks to the fact that there's no limit to what you might lose. Okay, so you put whatever, if you put in 10,000, you can lose all that you put in and more. So that's one downside and one negative aspect of a sole trader business. This whole unlimited liability for debt thing, where there's no limit to what the bank can do or the whoever the financial institution is to get back their money. So again, you put up your car, your house, your land, they can reclaim that and take it for themselves to cover your debt. So that's what unlimited liability for debt is all about. Unlimited. They're going to do whatever it takes to get back the money within the law, of course. Nothing illegal here. Within the law. Everything within the law to get back their monies for what you owe them. That's if your business fail. So it's in your best interest not to for the business not to fail, of course. So those are some of the key features or the key characteristics of the sole trader or the sole proprietor business. All right, see we have a picture of man operating his stall right here. That's a sole trader. That's how the average sole trader would look. You run a little shop. All right, you run a little stall. You sell some vegetables. You sell some drink. You sell some water. Anything like that. That's the average looking sole trader business right there. And again, if you don't know, all you have to do is just go outside the school, go down the road in the community. You see a mom and pop shop, sole trader. You see the man with the tray, sole trader. See the man peddling his banana and those things, sole trader. All right, all right. The sole trader paperwork. Now, what do you have to go to start this business? Now, anyone may do business in their own name. Business names should be registered. So you have to register the business name, of course. All right, you should have to register the business name. But still, if something is to happen, you are the one who's going to have to pay back for it. If somebody get injured in your store, then they can sue you as who you are. They're not going to sue the business. And we'll get into that later on where we see the difference between the companies and sole trader or partnership. Because a company is actually viewed legally as a person. So you have a public limited company or a private limited company, they're actually viewed as a person legally. So a company can actually be sued. But we're going to go into that later on. But for now, back to sole trader. So anyone may do business in their own name. Business names should be registered. So of course, you have to register your business with the local authorities. So your small business bureau, whatever, your inland revenue services, you should register your business name with those authorities because you don't want to have two of the same businesses out there. Then people will be confused. Who is what? Which one belongs to me? So you don't want that. So to be sure, you register the name of your business. All businesses must register with tax authorities and national insurance. So again, all businesses, small and large alike, have to register with the tax authorities and the national insurance if your country has that. So you must go and register your business with the Inland Revenue Service, if that's what your country is all about, or whatever authorities are over small businesses in your area. So you have to register. I know some people don't. I mean, to be honest, the small man on the road with his tray, I don't think they actually go in and register anything. Right? I don't think they do that. But nobody really come down hard on them either way. But to get some perks for small businesses, it is wise to register because you might get duty-free concession, you know, some tax off here, something here. When they have grants and stuff for small businesses, you might get, a little nudging to whatever program is going on. So it helps to register your business. But to be honest, a lot of small men out there don't really register their business because sometimes in their eyes, it's not really worth the registration fee for the returns. So that's one thing to keep an eye on. In some countries, a business license is needed. Yes, again, in some countries, but in others, you can actually just go and start the business just like that. I know in St. Kitts, you can just go and start the business without any too much hassling. They encourage you to register, but they're not too much hassle for your small businesses. For some businesses, there are other legal requirements. Okay, again, it's based on where you're located and the nature of the authorities in your area. So here we go. Some advantages and disadvantages of a sole trader. And again, like I said, they're going to compare them to the partnership later on. Let's go to them one point at a time. Let's start with advantages. Easy to establish a business. Few paperwork requirements. Owner can make decisions alone. Owner take all the profit. So let's break it down. Easy to establish. Like I said, for a small business, you can just go and one day and just start farming and selling. No big deal. You have some stuff, you can just go down the road, open a little stall, and just start selling. No hardship about that. So it's easy to start. There's no lot of hassle, no lot of paperwork. You have an idea, you can jump on your idea and go. You don't have to register one time or anything like that. You can just jump on the idea and go. You have stuff home to sell. You can start an online shop, eBay or Amazon Marketplace, whatever. You just go. You don't really have to go through a lot of paperwork. Like point two said, require few paperwork require. So there's not a lot of signing off your soul or your life to anything. In a big, contract and a whole lot of paper. No. Sole trader, you have an idea, you jump on it, you gone. You gone clear. Not a lot of hassle. Point three, owners can make decisions alone. Now, depending on how you look at this, it can be an advantage and a disadvantage. Advantages, you ain't had nobody to argue with, right? You have an idea, you just do what you got to do. It's your company, you do what you have to do. You don't have anyone to contradict you, you don't have anyone to argue with, you don't have anyone to answer to, you don't have any shareholders who demand that your company keep growing. No. You're the owner, you do whatever you want. You could be detrimental to the business, I could be beneficial to the business, but you're the owner. You make all the decisions alone. Nobody to hassle you, nobody to harass you, nobody breathing down your neck. You and you alone make all the decisions in the sole trader or the sole proprietorship business. Owner takes all the profit. Of course, if I put in all my money, all the profit is mine. Again, I'm the only one. I own this. So of course, all the profit goes to who? To me. That's the nature of the sole trader. You're the only one, so therefore, all the money, all the profit goes to you. You make $10,000 profit, that's yours. You make 5,000, that's yours. Whatever you make, that's yours. But of course, on the flip side, the losses and the debts, as disadvantage number one shows, unlimited liability for debts, which means just how you make all the profit is yours. Any losses incurred by the business, that's on you. Your business fail, that's on you. You lose your house, that's on you. Okay? So just as profit is nice and good when all is well, profit that's yours. You have to own the debts, you have to own the liabilities also. And again, we explained unlimited liability before, and we show that unlimited liability means that there's no limit to how much you can lose based on your debts. So if you keep going deeper and deeper in debt, then you have to pay it back, no care what. Okay? So the bank, you sign over your house, the bank going with your house, put up your house for auction, somebody buy your house and they try to repay that. Your car, gone. Your land, gone. Whatever you put up, just gone. So that's a major disadvantage for sole trader. Unlimited liability for debts. Next one, owner responsible for all damage caused. I think I gave this example earlier. If you have a shop and you just mop your floor and somebody step in the shop, you don't have up your wet floor sign. Somebody step in the shop, slip and fall, and sue you. That's on you alone. That's on you and you alone. You have to cover their costs. So anything that the company does, the business does, sorry, that's on you. Number three, difficult to raise finance. Most businesses start off, you need starting capital. But if it's you alone, then it's more difficult to find money because banks find it hard to trust one person when they're starting a business. It's riskier for the bank. So they might think twice before they actually give you any money because they want to see a roadmap. They want to see how they're gonna get back their money. They want to see when they expect to go profitable, all that kind of things. And the smaller you are as a business, the riskier the bank sees you. So it's very, very difficult to get finance for a sole trader business. A bank wants to know, okay, I have 5 people in this company, so if this one person, happen to die or something, this other person gonna pay me back. So it's difficult to raise finance in a sole trader business. You can only beg so much. Mom and your siblings and your family can only beg so much. But then you have to go and take out your own money out of your savings now, risk again to start this business. The last point, difficult for owner to take time away. Now this one is pretty much self-explanatory. If you're the owner of the business, the only owner, it's hard to just up and leave because that's how you make your money. You have to plan this thing properly. So if you know you have vacation once a year, then you have to plan it properly. So you have to make sure that you meet your financial obligations for this month or that month to put up towards whatever, because you just cannot up and go just like that because it's going to be detrimental to your company or to your business. Sorry, I keep saying company, but to your business, it's going to be detrimental. So you can't just up and leave. Okay, another disadvantage of the sole trader is what you call the lack of continuity. The lack of continuity. Meaning, if you as the owner die tomorrow, that's it. Business gone. Now somebody might run it, but they have to go and re-register, and it's not gonna be. It might have the same name, but in the eyes of the law, it's not the same business. It's the whoever took it over. So there's a lack of continuity. If you die, the business dies with you, as opposed to a company. I'm pretty sure you all have seen companies out there. You've heard about Microsoft forever. You heard about Apple forever. I mean, the owner of Apple, the founder of Apple died the other day, and you see Apple still going strong. If it was a sole trader company now, the owner dies, the company dies with that owner. So that's the next disadvantage of sole trading. So yeah, so take a glance at it. The disadvantages and advantage of sole trader: easy to establish as a business, few paperwork requirements, owner can make decisions alone, owner take all the profit. But on the flip side, the owner bears the brunt of all of the liabilities, all the debts. The owner is responsible for any damages caused by the business. Difficult to raise finance, difficult for owner to take time away. So that's basically the sole trader or the sole proprietorship in a nutshell. Like I said, it's sexy. They don't want to go too deep. It's just high school after all. You don't want to go too deep into the weeds. So let's look at the partnership now. Partnership. Two or more people own a business together. Two or more people own a business together. May be well managed and profitable, can benefit from new technology, has unlimited liability for debts. Many law firms operate as partnerships. So let's go through again. So some of the points are applicable to the sole trader as we discussed earlier. But the key thing here is that is two or more people own a business together. That's a partnership. Two or more people owning a business together. And if you look at this point, this last point here, many law firms operate as partnerships. That is so true. Many law firms, many doctor associations, many accounting firms. You hear Price Waterhouse Cooper. I'm pretty sure back then it would have been a partnership. Today I think is a little bigger than that, but that's the kind of thing you hear when you hear about law firms and accounting firms. Okay, you hear three names, law, blah, 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 blah. Those are the partners. Okay, so you might hear Thomas and Thomas, partnership. Johnson and whatever, whoever else, partnership. So normally, law firms, doctor associations, accounting firms, those are famous for being partners, being partnerships. Sorry, I don't know how many of y'all watch certain TV shows, like Suits, where you see everybody fighting to become partners in a firm, in the law firm. And you see this a lot of times in a lot of shows and a lot of movies where somebody trying their best to make partner because that's the ultimate goal, to make partner. You get a share of all the profits, you get to be able to call the shots and things like that. So partnerships are two or more people own a business together. And like I said before, can benefit from the technology. That's a case by case basis. Because like I said, with this new venture of e-commerce and online and those things, a lot of people can run profitable businesses using technology. Some people can actually run a business with their phone alone. Okay, you might be developing apps or something like that. That's on your own. Like for example, before WhatsApp was bought by Facebook, they were like two fellas, just crunching away at their app until Facebook bought them. So a lot of apps, a lot of new app culture out there, a lot of startups are partners or sole traders, but yet they're on the cutting edge of technology. Most apps are trying to do something new. So yeah, so can be, but then on the other hand, there are those who, because they're small business, they still have certain obsolete technology. Like I said, some place a shop might not have any AC, might not have any new display board or anything like that. You just have old school technology. You might go to a doctor office and you just office, some old magazines on the table, and a secretary. Just old school. But the newer ones might have, a TV to entertain. You might have the call sign, doctor would see you next, that kind of stuff. Technology. You might have be able to talk to the doctor online or something like that. And of course, a next disadvantage here, you say this word again, limited, unlimited liability. We see it again. So partnerships. So here's the thing about partnerships. At least one partner would have unlimited liability for debts. At least one. Sometimes all, but at least one partner would have unlimited liabilities for debts. Again, we're going to explain that again. What does this mean? It means that assets, good. Liabilities, bad. You go to the bank for a loan, that loan is a liability. It's a debt. It's a liability. So if your company fails, that means that at least one partner, or however the partnership arrangement is, when you're talking about sharing profit and loss, at least somebody might lose a house, might lose a car, might lose a piece of land, might lose whatever it takes for the bank to recoup that debt. That's what it's called unlimited liability. All right, so we have some examples here again. Don Cox, a partnership. Look at all these persons just waiting to just enjoying being a partner. This might be maybe a law firm, you know. Most law firms tend to be partnerships. All right, the paperwork for partnerships. A partnership may operate without a written agreement. No, no. Yes, that's a possibility. You might just have a word of mouth thing. But as point to clearly state, it is much better to have a written agreement to set out the rules of the partnership. Because you don't want them come, you got 10,000 loss, and then one partner say, dying on me. So one person have to bear the whole $10,000. You don't want that. Or you don't want them come for profit. You put in all the work, and then profit time come. This person want half, but they ain't put in half of the work. So you have to write down in the agreement, okay, profits are going to be shared 50-50, 60-40, 70-30, whatever the arrangement is. But make sure the best thing to do is have it in writing. Same thing for losses. Losses are going to be shared down the middle, 50-50. Our losses are going to be shared 70-30, whatever the arrangement is. It's best to have it in writing. Third point, this may be registered as a deed of partnership. So when you go into your authorities, you have what you call a deed of partnership. This outlines most of the information as it relates to how the partnership is being operated. Most countries have a partnership act. Business names must always be registered. Just like before, you have to register your business names. All right. Now, in some companies, remember we said the sole trader is where one person operates the whole thing. But in partnership, sometimes you have what is called a sleeping partner. Meaning, let's say there are three of us. One person just puts in finance, but they have no say in the day-to-day running of the business. That person tends to be called a sleeping partner. They ain't really about this going in and accounts and that kind of stuff. They're not really into the business aspect of the whole thing. They just give you the money for you to fulfill the dream, but they're a partner. They don't actively involve themselves in the running of the business. You might say, okay, it's three of us, two of y'all could run the business, I can just give money. That's it. That person is normally called a sleeping partner, the person that doesn't really actively run the day-to-day affairs of the business. So benefits and pros and cons, advantages and disadvantages of the partnership. Let's look at it one at a time. Each partner contributes experience and knowledge. Each partner may contribute capital. Partners can take time away with no major problems. Partnerships does not pay tax. Partners are taxed separately. So if you realize that some of these advantages are like direct disadvantages of the sole trader, right? Like for example, in the sole trader, they say that only one person is there, so only one person can use the expertise. Decisions are made by one person. But an advantage for the partnership is that each partner can contribute experience and knowledge. For example, what if we're trying to run a business? We are partnership. I went to school to study accounts. The other person went to school to study marketing. Now, when you come together, you have those two different mindsets, accounts, marketing. When they come together, they should form a nice unit. So I handle the money, so I make sure that we're not running a deficit, we're not running a loss. And you handle the marketing, make sure our products get sold, make sure our name is out there, make sure you do what you have to do to get the products gone. So that's an example of how a partnership has an advantage over a sole trader. In a sole trader, if I'm just an accountant, then that's my purview, that's my skill level. Just an accountant. Of course, you can pick up one things here and there, but for the most part, I'm gonna be an accountant. So you might find that accountants might be a little stingy, run the business a little stingy, don't want to spend any money on marketing and stuff like that. But if you have the two different trains of thought, different schools of thought, an accountant, marketing, come together, that should be beneficial for the business. Partners can Each partner may contribute capital. Again, to start a business, you need money. So for the partnership now, one person might have land, one might have a house. So you go for a piece of loan here, you go for a loan here. Together, we have enough money to start the business. So I don't have to spend too much. You don't have to spend too much, but together it's enough. I might have a 10,000 savings. You might have a 20,000 savings. I pull a five. You pull a five. Put together, we start our business. You might have family and friends. You have family and friends. You ask your family. I ask my family. Pull it together. We start the business. So it's easier to get each partner might be able to contribute capital. It's beneficial for both on a whole. Partners may take time away with no major problems. Like I said, there's some partners who actually don't do anything day to day. But if you have a good partner, then you can say, okay, this 2 months is my vacation time. This one is yours. So you work around that. Partnership does not pay tax. Partners are taxed separately. You can see how advantageous this can be. But let's get at the disadvantages now. Again, this word coming up, unlimited liability for debt. So what this means is that again, you can lose a lot more than you bargained for if your company fails. You can lose your house, you can lose your land, you can lose whatever you put up as security to obtain the loan. You can lose that. One incompetent or dishonest partner endangers the whole firm. So if you got one person on your team who is a thief or very dishonest, they can actually ruin the reputation of the whole company. So that's something that you have to look out for. You have to make sure that you're in business with persons that are honest and trustworthy. Because one thing, you can take a lifetime to regain that trust. Trust can be destroyed in an instant. So you don't want to have any unscrupulous people working for you or working with you. All right, disagreements may be hard to resolve. Again, remember in sole trader, you alone, you make all the decisions by yourself. But in partnership now, you have different ideologies, different mindsets, different people coming together. So there might be conflict. You can have arguments. Let's go back to the example with the accountant and the marketer. So, marketing costs a lot of money, but the accountant tend to be a little stingy. So you might have a disagreement as to how much the budget should be allocated to marketing. Because the marketing manager might say, okay, and 10,000 here. But the accountant might say, look, no, that's too much. I could give you five. And then you have a disagreement. So because you're a partnership, more than one, after all, I don't expect you to be arguing with yourself. In a partnership, you have people there that can cause conflict. That's inevitable in any group situation. You might have a little conflict. So that's one disadvantage of partnership. It might take a longer time to come to an agreement because confusion. Okay, that's just like the last point here says. In a large partnership, communication becomes difficult. So the larger a business becomes, the harder it is to communicate. Because if it's a sole trader, you alone, five people working for you, that's easy. That's very easy. Send out the WhatsApp message. Everybody get that. Send out a memo. Everybody get that. Soon as you reach in the morning, everybody in the same building, no problem. You can communicate. But as the companies start getting bigger and bigger and bigger, the partnership gets bigger, then communication tends to get more difficult. You might have separate offices. You might have a chat that's too distracting, so you might come out like a lot of things that happen as the business gets larger and larger that can affect communication. All right, so that's it in a nutshell for sole trader versus partnership. Again, normally 60 tend to come want you to compare, advantages or disadvantages of a sole trader versus a partnership because they're like, different sides of a coin. So keep that in mind. That they tend to want to compare these two. So that's it for sole trader and partnership. We are going to jump into companies the next time around.